Hey everyone, it's actually Chris from Excel as well as Solstice. You can find us on both websites, X, Instagram, as well as Discord. Remember, the weekly YouTube video is for free for everyone to give you an overall view what's going to happen in the coming week as well as review the prior week. So remember to check us out, give us your commentary, let us know what you think. When we are not a broker dealer, our past performance does not give us any indication of our future results. Let's go to the first slide that I have up here. And what I basically did on this slide is basically I put the $ TICK, which is representing the New York Stock Exchange composite, showing you the overall sentiment on the cumulative tick from Tuesday. The Jackson Hole Friday was a rally up on Tuesday and Monday because Monday was a holiday. We were off for Labor weekend and we had Monday off. Tuesday we opened up on a sell-off. Then Wednesday was a inside market. Then Thursday was an up market, as well as the Friday was up market and we sold off. But the cumulative tick was positive in the overall market. We did not go below zero. So let's go to the next slide. And what I did here, I put the advanced decline line of the New York Stock Exchange representing the overall market. You can see here on the cumulative tick on Tuesday was bearish. Wednesday was a little bit, we had an up day, but it was more of a bearish to neutral day. Thursday was an up day, as well as Friday. We looked above and we failed and we tried to recover, but we did not touch on the advanced decline line below zero line. While the VIX sold off from Tuesday was the high on the VIX. Thursday was the lowest on the VIX. Then we had an inside day on the VIX on Friday. Let's go to the next slide. And what I did here, I put some of the sectors in the overall stock market. You can trade equities, futures, commodities, as well as option. I did list some of the SPX, the Nasdaq, the Russell, the Dow, Bitcoin, Ethereum. Bitcoin is in a little bit on a downtrend while Ethereum is holding up. Gold spiked up and it broke out, including silver. And we are seeing that the bond market, the ZN or the ZF on a 10-year Treasury starting to pick itself up. They are waiting to see what the Federal Reserve Board, we think that the Federal Reserve Board in September gonna be about 89% decreasing interest rates. I put the ETFs for this Fortune 500, Nasdaq, the Russell, the Dow, ET, gold, as well as silver, and IEF for the 7 and 10-year bonds. I put the Mega 7 up here, including Netflix, which should represent Apple, Amazon, Google, Meta, Microsoft, Netflix, nvda, as well as Tesla. nvda is in a little bit in a downtrend. Netflix sold off, so I am paying attention to actually Google as well as Tesla. I got AMD is on reset, avgo is on reset, Coin may be an opportunity to buy, Hood is on a reset, JP Morgan on a reset, Lulu's on a reset, Palantir may be on an uptrend, as well as UNH in basically biotech, healthcare sector. I put the New York Composite, the semiconductor, couple of large cap tech in the S&P 500, as well as the play, as well as the interest rate bearing account. Remember, we're going to trade side market, up market, as well as down market. We can trade the bull market, bear market without any bias on any of these sectors. Last but not least, you can check us out at the website, get in contact with us. We're here to help. Let's go to the first slide that I have up here. And what I did, I put the S&P, Nasdaq, and the Dow on a monthly chart. You can see it. It says it just shows 1 month candle for each one. We are in a linear regression as of March 23rd, 2020 area, the November, December high of 2022, the reset in 2023, the January low and the high in December that was created. Then we fell back down to April, rallied back up, but we are holding on an uptrend. But this candle is an inside candle. You can see that there is a volume created on the profile on the monthly bar. So what we're going to do, I'm just showing you the candle. It represents a green candle or red candle when it does sell off. But I wanted to show the overall range, what the market is doing on the daily charts on those three combination of those instruments without the Russell. So I'm going to go to a daily chart right now. And what I did, I wanted to show the overall representation of the ES, Nasdaq, and the Dow when we were selling off. So you can see the sell-off, there's volume to the red side. If I zoom in here from the May 13, April, and the breakout up here, you can see that these gaps up here, we rallied up, we consolidated, but the RSI is diverging in a trend while we're making new highs, and we made new highs in the S&P while the Nasdaq did not make it this week. So we are in a consolidation candle, but I'm afraid of any sell-off or coming back to the consolidation down here before the buy zone. So this is why I put those three instruments together. So I'm going to put right now the micro 2K, which is the Russell 2000, and I wanted to show that the Russell broke out of this consolidation. This was the candle that took us down. This was the peaks in the prior years. The Russell is continuing even on the weekly chart. You can see that we are in a wedge. The Russell fell down but looked back up to close for the year 2025, an annual new high for 2025. So let's go right now, take a look at the micro ES, or we can do the SPY. S&P 500. You can see we are in a similar situation here after this gap here. We are in an incline, but the RSI is diverging lower. We looked down, we held the 18 SMA and the 5 and bounced off, but we sold off and we bounced off on Friday. So what we can do on that daily chart, you can see here that this is the volume on the candle. Let me see if I can get there. I'm trying to look for correction in the candle to get rid of not the supply study. I'm trying to get rid of the Mobius colored candle, multicolor. See, it says that's Momba. Let me see here if I can correct it. Still doing the same thing, looks like. Trinity. Mobius multicolor. We're going to remove the Mobius multicolor charts. The reason why I wanted just to represent the candles in pure form. So we're going to go to an intraday. You can see that the range on Monday, Tuesday, because of the holiday. Friday was sell-off. Monday was a holiday. So we got Tuesday, Wednesday, Thursday, Friday. We sold off and rallied up, but we sold off and came back up. So what I want to do is go to an hourly chart, 20 days on the SPY. I put these charts with that. I wanted to show the gaps, and the reason why I took the high and low for the week. You can see the support, the support, the resistance, the 50%, the 38, and the 61. I do not have the 78 or the 23% up here. So what I'm going to do, go get a Fibonacci. You can draw from top to bottom. You can see how it does it. The chart, it does the same thing, and you can see where that 50 line up was the resistance, and the resistance line up was the support, and you can see where the 23% is, because you can see that this consolidation here, if we get an oval, I'm going to go get an oval or a box to show everybody where the support happened and the breakdown. You can see that this area where we licked up, we consolidated, fell down, tested it, came back down, created a W, rallied up, became the resistance, and we got support down here. I just wanted to show that major support and resistance in case we do sell off. This is a great area for the buy zone, or we act as support. We can come back here, do it in another format. We can take this area here to this area where we closed on the weekly. You can see that this support, if we're coming back to the 50, if this is going to act as support, or this area here of this consolidation in order to continue higher. That's why I am using these boxes, and I wanted to show the SPY range on that 4-hour chart. Let's do now the QQQ, and I want to go back to the daily chart, and we'll come back to the hourly. You can see on the daily that was a support in 2024. This is the February high in 2025. On the 19th, we fell down in April. We rallied up. We got these gaps, but I wanted to show that these gaps here, this is considered a major support area. In this major breakup, consolidate, rally, fall back to that area, this would be considered support. in this area if I want to look at it this way in case we do fall back in this area. So let's take a look at it on a 4-hour chart. We're going to go back 20 days, 4-hour. I do have the overnight gaps off. I can take the weekly high and the weekly low down here. You can see where I marked them. We're going to see if we're going to accumulate higher or lower, so we can draw the Fibonacci from high to low. And you can see where the support and resistance are. If I zoom it in or I put across this area would be considered, if I do get the box activated, and if I get this box where the support and resistance were, this area would act as support. We're going to remove this box so you can see where the consolidation, if there is resistance in this area and we cannot clear this area, we look above and fail. It's going to depend what Monday opens, if we're going to be continuation, break this area to continue higher, or we fall back to the 18 SMA 50, find support in this area and bounce back up. This is why I am using these boxes to teach you how to do it, using as well Fibonacci's on the charts. So let's remove that. I'm going to go to the consolidated Mega 8, which is the Magnificent 7. I have included Netflix in it. You can see here when I say the Nasdaq 100 Mega 8, I have Apple, Amazon, Google, Facebook, Microsoft, Netflix, and nvda. You can see Microsoft, nvda is on the sell-off, as well as Netflix and Broadcom. But I wanted to show this consolidation. We looked up, we failed, but bounced back up. So you can take the high and low, and you can find that there is a little bit of consolidation in this area once the Mega Fantastic 8 finds support, or do we fill this gap to this bottom area in case the trend does fall, because this is a hammer. This looks like a bearish flag on the overall market on the Magnificent 8. Let's go right now, take a look at Tesla by itself. And you can see Tesla looked above and failed that 345 355 area, 356. If it's gonna hold the 354 area, 353, Netflix comes down and bounces off, or it continues higher. I'm looking for that gap not to fill, because you can see where the gap was between here and here. We do have this little tiny gap in this area. I consider this, if it's gonna hold, I'm looking for this area to hold for Tesla to continue higher. If not, we'll look for the backside of the gap and the consolidation where it started to move back up in this area. So everyone will be able to understand supply and demand and supports on the charts in NVD in Tesla. While NVDA, you can see that there is NVDA. You can see that NVDA has started to sell off. I'm going to go to the daily chart. See, it cannot come back to this consolidation where it broke down from. This area is very important for NVDA to clear. If it cannot clear this gap here, this is a inverted reversal flag, or a hammer, or what we call basically basically upside down flag. So if I look at it on the daily, you can see on the daily where it broke out. I have that linear regression uptrend channel. We do have this gap here, and I do have the annual Fibonacci from the prior year, 152.86. You can see that this area has been resistance from here. Even if I activate this and I just grab it to this area here where we can find the support and resistance, because if NVDA cannot clear this area to go back up, I think the consolidation would be coming back to this area here to fill this gap, and eventually 100% of that move from where it broke up, retested halfway, continued higher. This is NVDA. It doesn't look strong, so this is why I'm showing it. And Broadcom, which is avgo, is in a similar situation. When it did this reversal up, it sold off a little bit. If I take it to the 4-hour chart, you can see the sell-off. This is a flag, inverted flag. If there's going to be continuation to the downside, partial gap will be filled, or it reverses back right in the middle of this range and goes back up. If it holds this area, then it nickels its way up. I rather use AMD for the long instead of avgo or Broadcom. I will show you AMD and I'll go back to the ES and I'll do the measured move on the ES and the Nasdaq. Let's go to AMD. In AMD, I'm going to show it on the daily chart instead of the hourly. I know it looks like an reversal hammer, but let's go to the daily. You can see here on the daily where AMD created that head, the shoulder, the head, the shoulder here. If it's going to fill, I'm paying attention to this area here. If it's going to find support in this area in order for it to continue back up, reversal back up in AMD. Let's go now to the micro ES. And I'll do the micro Nasdaq and we'll do the measured move. You can see that consolidation where we called the support at 51.45 up here. We took it long, then we had this gap ever since there. We never have looked back at this gap either. This gap here, which was filled, you can see it here. There's one more gap. I consider this is one gap. This is another gap. The other ones are filled. This is considered where that green box is, and that 175 is a very important area to hold. You can see it on Friday we created an annual high on the S&P 500 for 2025. We looked up and we failed. As long as we cannot clear this candle up here to continue up, I'm looking for the backside of the 50 SMA and the consolidation in this area first to find support somewhere in the 63.35 area, 63.23. So this is very important in the S&P. Let's go do the measured move. We're going to go to the 4-hour chart 30 days or 6-hour 30 days. You can see the highs for the week where it was and the lows for the week where it was here. In order for it to continue, I can duplicate this area from here going up. But what I want to do is show you how to do the measured move from highs to lows to see the extensions. And we can look at it that way. And what I'm going to do is edit the property, extend it back to 8.5. Push OK. You can see that there was consolidation, come back to zero, bounce up, come back down, bounce up. So if there's going to be continuation in the S&P 500 and this thing reverses back up, I will look for the 125, the backside of this channel, eventually the 50 to the upside. If I do fall through the 50 and I cannot hold the Friday's low, the 50 SMA may not hold, I will look for the 63.57 and eventually the 116 SMA at the bottom on the E-mini S&P 500, eventually coming back down to that area. Let's take a look at micro micro NQ. And this is the micro NQ. You can see on the micro NQ from the highs and lows, if you consider this is a shoulder, this is a head, this is like a double shoulder. It created a higher high, but was not able to take out the prior week's high. So if I take the distance from up here down to here, you can see the measurements on it. Edit the property, extend it to the left. We're going to go to 8.5. And you can see the level extensions to the upside and downside in case we end up, rallying back up in the semiconductor and the tech sector. The extensions would be 180 to 200 and vice versa, minus 50, minus 80, minus 100. To the bottom, we'll catch up with the 200 SMA. Let's go look at it on the daily chart. And what I want to do is show you the daily and where the levels are on the 50 and the backside of this channel. If I connect these two dots, this is a double bottom. Is this a W to continue higher on that sell-off, or do we continue up? Pay attention to what the market offers you. Let's take a look at the SPY. I will do this on the SPY as well. I wanted to show these levels on the hourly or the 30-minute. You can see where the support and resistance is right here. And we can see that the support and resistance on the charts, looking at it, coming back to the 50 SMA and bouncing, or if there's going to be continuation. This area is considered a lot of, let's go get a box, my fault. I can take a look at this area of consolidation, if this is going to find support on the leg down or up in order to continue, and vice versa. If we clear this area here, we look to continue up in the upper channel, and that extension would be to the upside to this side. And if we fall back down, we try to find support here. The second area would be the zero line and this consolidation down here in this area. So I hope this video was very helpful. If you have any questions, we're here to help. Give us your commentary, smash the like button, share with your friends, and let us know how we can help you. Hit the subscribe. Take care. Over and